gonna share with you real quick a simple strategy I use to pass my prop firm using NASDAQ NAS 100, call it that way, or some brokers say it's NDX 100. So quickly, all we need to look at is this. First of all, I'm gonna be doing this analysis on 1 hour time frame, and entry is 5 minutes. And these are the conditions we need to meet. First of all, you need to identify the Asia session, which most times it's a range, and we want that range to break. Then another condition is if the range broke out in the London session or the New York session broke the Asia range. Okay, so Asia range breakouts maybe, or it broke out in the London session or in the New York session. Then when that happens, we want to see a market structure shift, either upside or a downside, and then engulfing candles, other block, FVGs, those things, we need them to confirm our entry. All right, and our target is the opposite end of the range, or if the price closed above, then we target old highs. All right, then CP2 you can allow to run, and then you close if you see an opposing engulfing candle. And then most times it is good to break even at 50% of the Asian range. That means if you are trading, if your target is coming back downwards and you are targeting the opposite end of the Asian range, it is most times good to take break even, or you leave it, and you can set a 20 to 30 pips stop loss. All right, so let's go. What are the conditions we want to see Asia range breakout? So let's start from here. You can see clearly that this is the Asia range. Okay, let's start from here. We identify one as the range. Now what happened? You can see it broke out here. The London session took out the Asia range. You can see it here. It took out the Asia range. All right, so what do? We can mark that out. Okay, mark that out and go to your 5 minutes. Zoom out a little bit. So in your 5 minutes, you want to see a shift in market structure. See, it broke out downwards and we're shifting. Want to see a shift upwards. And what do we have here? We have this break of structure and a quick retest over here. So this is your entry. This is it. You can see there is another block here which price tap into, and then it continued to go. So what is your target over here? You know, price is fractal, broke this small one, break this. Sometimes you can choose to enter from here. You can choose to enter from here or here. And when you enter from there, there is a cool to the opposite end of the range that is around 800 points, 8,000 points. So you can do your calculations for that. You see, like I said, allowed to run, and when you see opposing engulfing candle, you can close it, which is this. So if you have the guts, you're allowed to run, and that's it, guys. So we see another example real quick. We are looking at 3 cases here. Check this out. This is the Asia range. This is another one. Now this one might seem a little bit confusing, but it's the same thing. You just need to apply the same logic. Okay, so it broke out here in the New York session over here. That's the breakout. And what do we do? That means we are selling to the opposite end of the range, or 50%. You take break even, because this market is very, very volatile. So we don't want to delay our profits. Alright, so zoom out and go to the 5 minutes. Don't forget the time frame alignment here, 1 hour, 5 minutes. So what do we have here? It broke this one here, and then a retest. You can see the breaking there. The market structure shifts, and then it retests to this point. This kind of market, you have to put your eyes on it, ensure you are done before you go. And what is the 50% of the range? This is the 50%, and then this is the opposite end of the range. There is always an order block over there, so I suggest always mark an order block inside the range, up and down, so you can use them as your target. So if we took this trade, we would have around 11,000 points from the 50%, and then you see market went back up and then came back down. That is 19,000 points. So this strategy it's profitable. It's profitable. We're gonna see a third example, and that's it. I don't want this video to be too long. And the third example is another case where you have, this is your Asia range, and you see price broke the range and closed above. Okay, closed above with this huge humongous candle over here. With this kind of a candle, when you see this, the green candle, always expect market to retrace itself, because the news happen here. All right, so maybe the CPI or blah blah blah, one of those news. Always expect a return candle back into the range before market starts its normal movement. Okay, so if any news happen, even if it happened outside from down here, from here it goes down, it's gonna find its way back into the range, and then it starts moving. You can see over here the same thing happened, but in this case we were from the Asia range, and then from the Asian session we went back into the previous day range, and then market started moving normally. So when you see this, if you have the guts, you can trade it, but I advise you leave it, and then you find your way back into the range, and that would be a wonderful trade to take. So from here you can have at least, see your target is 50% of the range. That's it, 23,000 points. You can do your calculations, check your points and your pips. That one is a close above. Let's see this example finally before I wrap up the video. Okay, so this is the range. And where is the close and below? Price closed below the range. Okay, and we have a bit of consolidation. Something like this is not a good day to trade. All right, because unless you are a guru, like I said, you can check some other blocks inside the range and see how you can trade them. You can see the Asian session created this other block over here, and price tap into it in the New York session, and then we have a trade to the opposite end of the range and even targeting old lows. You can see it there, old lows, and that's a nice 18,000 points. Okay, it's a wonderful one. So this is a final example. Sorry guys, final example. Now this is what I said in the close above. If it closes above over here, if closed above, then we hold and target old highs. All right, so here is your range, and there is the breakout. We came back into the range. You see the breakout is not huge, so this kind of simple or short breakout, you just have to be patient and hold on. And you see price went back up. Okay, price went back up. You can check your 5 minutes, and let's confirm this movement. Sorry. All right, so what do we have here? This is the breakout. This is the breakout. It came back and go back in, and you can see there's a close above. That's what we were looking for. This is a close above. It came back in, then it went back up and closed above, and then you can see another one here. Okay, that's a wonderful trade over there. Over here you can see that it closed above again, and then we had a simple retest and close above. So that's your entry over there. That's your entry. You're just going to be targeting a so with this we're going to target old highs. We are here guys. We want to target old highs. What are the old highs? This is the old highs. So if you take the trade, if you take your entry from here, when it closed above, and target the old high, that's a nice 15,000 points. So I believe this is a good strategy for a startup. Don't mind my softwares, or don't mind my system. I'm gonna upgrade. So if you like this video, please subscribe, and then hit the like button, hit the subscribe button, and I'll see you on the next video. You can see the same thing happen here, close above, and then go to your 5 minutes time frame, look for market structure shift at the upside, and you target old highs. You see this one here, it's a breakout. The share range broke here. Quickly, let's just do that. You break, poof, and then you see market retracing back, and then you trade, you go back into the range, find your way back into the range. Same thing happened here. Here is the close above, you hit it. Here it broke out of the range over here. You can see it over here. This is the range high. It broke out, and when it breaks out, like I said, go to your 5 minutes and look for market structure shift. Then you need to find a sell, and that's it, guys. And if you are lucky, the news happened here. It is a wonderful trade. Same thing over here. Same thing over here. Over here too. And that's it for all that. Thank you very much. I'll see you in the next video.